Good morning, good evening, good whatever time it is you're watching this. I'm Dave with Cups and Handles, and in this quick market recap, we're going to break down today's SPY price action, identify the key technical levels that matter, and discuss what I'm anticipating for the next trading session. We only have a few minutes, so let's jump right into the charts. Hello everyone, welcome to today's market recap and next day analysis. This is going to be a fairly short video as I don't have a lot of time to record, so let's go ahead and jump straight into it. So today we saw quite an interesting day. We did talk about in yesterday's video how I had a very high expectation that we were going to basically pull down, hit that 735, and close underneath that range. I was really expecting anywhere from that 731 to that 734-ish range, give or take. And I'll explain why I expected that range in just a second here. However, we had the FOMC today, and with the FOMC, we had a very, very large push upward. Okay, now some of us, we were able to grab calls right at the very bottom pretty much, and ride those all the way to the top of this channel. Again, this is that major selling channel. But with that said, when we got to the top of that channel, we had the anticipation and the expectation that we would see the rejection again. So once we started to see volume tapering in there, we sold our calls, entered puts, and let me tell you, today was actually pretty awesome. I had calls, or I had some puts run 3,500%, and the two last runners that I had ran over 6,000%. It was bonkers. But besides that, we got to the top of the selling channel, and we started to sell down. Broke through our supports right here, which we're actually just going to delete because they're not relevant anymore. Hit that 731.95, and from that range, that's when I started to slowly take profit on some of my puts. Now, we started to see the selling volume pick up even further at that point. Okay, and with that volume picking up, we actually broke through all the way below our selling channel. And with that break below the selling channel, we targeted that support that I was talking about last week and earlier this week, which was at the 726.63. Now that we have broken through that channel, we can go ahead and delete the 731 as well. We have now created a very large and nice structure. This structure being that very large inverse cup, and we did talk about this multiple times. Now, with that said, with this inverse cup being created, we have a couple different things we have to factor now moving forward. Is that one, this selling channel is going to expand. Okay, so very likely we're going to target one of these bottom supports in here. First, we're going to target this one at the 738 range, 739. Okay, because this is still a very large selling channel. It's still very persistent, and I do expect it to hold its weight. However, there is still this support further back. It's at that same range, but further back. So if we're going to be seeing this channel expand downward a lot further, which I think the odds of that happening are extremely, extremely high at this point, then potentially we could be seeing, that much further downside. Now, the reason why I talked about the 731 and why I expected it to close at that range is because on the daily time frame, our lower Bollinger was at that 734, 733. Currently it's at the 732.99, which means that we did secure the lower Bollinger day one. Okay, we did close below that level. We closed at the 729.46. So a very, very deep close compared to, the high of the day, compared to the rest of the week and everything. We had that very, very deep close. Okay, but that close was below the lower Bollinger, and we expected anywhere from that 731 all the way down to that support that we talked about. Trading is a skill that can last for a lifetime. Join my Patreon for live classes, my personal market analysis, premium Discord access, and direct communication with me. Invest in yourself, become a more consistent trader, and build a better future for yourself and your family. Visit patreon.com/Wooksy to join today. Thank you so much, and let's return back to the video. Now, the expectation from here is that with the lower Bollinger Day 1, we do expect a Day 2 lower Bollinger, meaning that we do expect further price action. We do expect a lower low, and from that lower low, we do expect some upside. Okay, now what is that upside going to be? It's going to be this 5-day moving average. It's going to be the 5 mall. Now the 5 mall is going to be pulling down very aggressively. Okay, it's currently at the 737.30. That's very likely going to be opening around the 734 as of tomorrow. Might be lower, but I'm expecting it to be around that 734, potentially even 735. Now, with tomorrow us expecting a lower low, I don't know exactly which support we're going to be targeting just yet. I'll be talking about that in the morning, as I just don't have a lot of time to set that up. Potentially we could be targeting the 722.44. Okay, but I'm not expecting a whole ton of downside from this area. Now, with that said, the 5 mall is going to be around that 732, maybe even 731 point by the time we see that upside hitting it. Now, in the overnight currently, we are already at that 732.49. We did have some major earnings. We had Meta and Microsoft, which Meta ended up doing pretty terrible, but Microsoft is, going bonkers. So there's still a little bit of indecision in the market there. Okay. Now, one thing that I do want to cover is that tomorrow in the early morning, so at 8:30 a.m., we do have some very crucial data sets coming out. We have the PCE data and the GDP data, so the quarterly GDP data. Okay, and with that, with the structure we have built here, we are expecting bullish structure to form at the bottom, if it hasn't already formed there. Okay, and the reason why we expect that bullish structure is because we expect a handle to the upside before further downside. Okay, so that's the real expectation at this point, is that we should see that lower low, whether it's in the pre-market, whether it's very early in the intraday, but we should be getting some bullishness from that. So I'm not too worried about a massive sell-off at this point. We've already closed that major structure, and from closing that major structure, we should get a little bit of reprieve. Now, again, we do have some supports that we will be targeting, like this 722.44, potentially the 719.38. I don't think we're going to be hitting that tomorrow. I think that's still kind of far away compared to what we're expecting out of the overall market. We still have some upside left before we really start seeing the market pull down. But we do have a lot of structures to close. Okay, again, it's very likely we're going to be trying to close cups all the way back down towards this 627. Okay, now that's going to take a while. That could take months. This isn't exactly a one-day thing, but that's what the market's going to be doing at this point. And the reason why it's going to be doing this at this point is because we're starting to see our moving averages cross underneath the 50-day moving average. Okay, and that's basically the first step to, real selling taking place. Again, if we see the 20 MA cross under, we'll have all of our moving averages perfectly set for a bearish setup. We'll have the 5-day underneath the 10-day, 10-day underneath the 20-day, 20-day underneath the 50-day. And at that point, all we're doing is working our way down towards this 200-day moving average. So we still have a long way to go, but my expectations for tomorrow, again, is to hit that lower low. It could be that 726, could be slightly underneath it. I know we did pull down to the 725.98, but I do expect some upside reprieve before continuing downward. Okay, so don't be too put biased at this point, unless you're taking longer duration puts. Again, I've been talking about the SQQQ calls for quite a while, and they're doing extremely well at this point. I would expect, and not expect, but I would suggest, even though I can't give financial advice or anything, is that when we get to the top of this channel again, try to take some of those positions if you're expecting further downside. Because I think those are going to do very well over the next month and a half. Okay. But our upside from this point is that we can start targeting some of these other supports or other resistance ranges, excuse me. So the first range that I'd be looking for tomorrow is the 738.23 if we're going to have a major push to the upside. I don't think that's going to be the case, but if it is, that's going to be one of the major ranges to start targeting. But from that, we really don't have a whole lot of upside resistance here. A lot of our resistances, as you can see in this range up here, all these red lines, far, far, far above where our price action is sitting right now. Now, tomorrow in the after hours, we do have some important earnings. Not too worried about that right now, so we'll go over that in tomorrow's video. But that's going to be today's video. Thank you so much for watching, and I will talk to you in the next one. Take care, everybody. That wraps up this market recap. If you found the analysis helpful, please take a moment to like the video, leave a comment, subscribe to the channel, and share it with someone who would benefit from these daily market breakdowns. It really does help support the channel and allows me to continue creating free educational content for everybody. As always, have a trading plan before you enter a position, manage your risk, and remember, we're not trying to predict the market, we're trying to prepare for it. Thank you all for watching, and I'll see you in the next one.